So, good evening, one and all, once again. Am I audible? Sir, am I audible to all?
Yes,
Yes,
sir.
sir.
Yes.
Okay, so
Yes, sir.
today,
Yes, sir.
Yes,
today I am
please.
not using any microphone or like that, so that.
It's
Somewhat louder,
audible.
please.
Okay,
Much,
sir.
much better than last session.
Okay, sir. Okay, sir. Okay, sir. I will go slow also because today's session is a very important. I'm going to solve some problems also. So please learn the problem during the webinar time itself. And in this session, I'm going to take the entire, I'm going to complete the entire subject within 1 hour for 30 minutes. The remaining 30 minutes is for the interaction session. So that suppose if you have got any doubt, you can ask and you can clarify. So with respect to the problem or with respect to the theory. So I am giving you the sufficient time so that because if I go on explaining each and everything, so there is no meaning in it. So suppose if you have got any doubt, so please make a note of it. So at the end of the session, so we will have an interaction for about 30 minutes or even 35 minutes. Okay. See, today's session is with respect to the calculation of the effective age. I think in the last session, we have discussed something about the depreciation. You know very well that depreciation and age, both of them are interrelated. If age is more, depreciation will be the more. So this will be the fundamental thing. All of you know very well. So depreciation and also the age, both are interrelated. Okay. Even I am going to revise a few slides of the previous session also, so that those who have not attended my previous session, so they can also follow this session very easily, because depreciation is connected with the age and age is connected with the depreciation. And depreciation means it is a loss in value. See, from the point of value, it is a loss in value, that we call it as a depreciation. Okay. Depreciation is a complex subject. Why it is a complex subject? Determining the depreciation is not a simple sit in the office. It is not a simple sit in the office job. So even in the last time I told you, see, depreciation is always decided by the market, not by the formula. Okay. Now it is operating. Now, valuer needs to understand. See, what are the subject that is to be understood by the valuer? Types of or forms of depreciation. How many types of depreciation are there? Because once if you are able to understand how many types are there, then it is very easy for you to identify them and quantify them. See, what is the job of the valuer? Job of the valuer is a very clear. Our job is to identify the depreciation and also quantifying the depreciation. Quantifying means we have to measure the depreciation. Unless we measure it, it is not possible for us to give the value. Okay. First thing is we should know what are the different types of depreciation. And second thing is we have to identify the depreciation and quantifying the depreciation or the measure the depreciation. So these three jobs are done by the valuer. These three jobs are done by the valuer, not by the structural engineer or any other engineer. Okay, so that is why I always say that a valuer is greater than an engineer. All valuers are very good engineers. All valuers are very good engineers, but all engineers are not valuers. Okay. Now, what are the forms of the depreciation? Even in the last time also, we have discussed the different types of depreciation in detail. But now I am not going to take all these three types of depreciation in detail. But anyhow, I will just define what are the three forms of depreciation. The first one is the physical deterioration. Okay. The second one is functional obsolescence. Third one is external obsolescence. See, physical deterioration means See, even the many engineers, civil engineers or plant and machinery engineers, see, they have all determined that any asset, they go on, any asset value will go on decreasing with the age. That means age is directly related with the depreciation. So that is why, whether in case of a machinery or in case of a building, so we always use certain formulas to determine the physical deterioration, because we know very well that the age is having a direct impact on depreciation. Because in case of a building, many materials, it may be a plastic, walls, floorings, and whatever it may be, they go on deteriorating, including the steel and concrete and any machinery with the heavy usage, or without, even if you are not using any machinery, suppose if you are kept as it is, then also with the age, they will go on deteriorating. So there will be a wear and tear, and also the disintegration or decay or rot. So all these comes under the physical deterioration. And this is directly related with the age. If the age is more, automatically the physical deterioration will be more. So that is why, by using certain formulas like age life formula or constant percentage method or whatever it may be, so we can determine the physical deterioration very easily. So, but as a valuer, we always use age life method of depreciation, to determine this physical deterioration. Next thing is the functional obsolescence. Functional means it is directly related with the utility or the comfort. Okay. But the external obsolescence means this obsolescence is directly related with the external factors. External obsolescence means it may be a technological obsolescence or a legal obsolescence or anything external. It may be a legal, or it may be a technical, or it may be any economical factor. So that we call it as a external obsolescence. But the problem is, somehow if you try, we can very easily determine this physical deterioration. But how to determine this functional obsolescence and also the external obsolescence? Because as a valuer, we need to understand this one. Okay. Now, before going for that, say, what is that physical deterioration and what is this obsolescence and all these things and how to determine data, it is very essential for all the valuers to understand the life cycle of depreciation in buildings. Okay, here I have prepared one chart or a beautiful graph to indicate the life cycle of the depreciation in buildings. Okay, so even this chart is applicable for even plant and machinery also. So I will come to that point afterwards. But for the time being, you just see life cycle of depreciation of the building. Now you assume that the life cycle or the total life of the building is 60 years. Total life of the building is 60 years. Now, so this graph up to here, you assume that it is a 60 years. Now you just see this cycle. So there are 3 cycles. So this may be around 20 years or 25 years at the maximum, and another 15 years or 20 years, another 20 years. See, I have roughly classified. So any building or even any machinery can be divided into a 3 life cycle. Okay. See, in case of a building, suppose if you analyze this figure, up to 20 years or 25 years, there will be a only physical deterioration. Okay. So that is why, you may believe it or not, the banks will not finance for the buildings with the age more than 20 years or some banks 25 years. Why? They know very well that the this theory, one is the, see, there are 3 theories. One is a age life theory, and another is a midlife theory, and another is the extended life concept. So I'll come to this point afterwards. So this is a midlife theory. So the bankers know very well that the buildings will lose the value. So in the midlife. So that is why they are not going to finance for any building which is having a age more than 20 years or 25 years. But for the new construction, they will provide it. Okay, so that is why in the beginning, from the 0 to 25 years, there will be only a physical deterioration. So for the values, no problem at all. You can use the age life method of depreciation and you can determine very easily what is the value of the building. Even regarding the age also, you need not worry. Okay, so directly up to if it is 5 years, 10 years or 20 years, see, you can just analyze. So there is no economic obsolescence and there is no functional obsolescence and only physical deterioration. We can calculate the depreciation very easily. So that is why I am stressing for all the values to understand this life cycle of depreciation in buildings. So now you can apply. And next, what happens after this 20 years or 25 years? You just see. No doubt the building will stand for 60 years. No doubt the building will stand for 80 years. But what about its usage? Now, after you just see that after 20 years or 25 years, what happens? Economic obsolescence will come into picture. Technological obsolescence will come into picture. Legal obsolescence will come into picture. Aesthetic obsolescence will come into picture. Functional obsolescence will come into picture. No doubt, all these 2, 3, 4, 5. All of them are external obsolescence. All of them are external obsolescence. Functional obsolescence is a separate. Now, in the midlife theory of these buildings, automatically all these will affect. Then what is to be done? What is to be done? So we have to go for the extended life theory. Suppose if we are able to cure this, any of this aesthetic obsolescence or the functional obsolescence, no doubt automatically the economic life of the building will be extended up to 70 years or 80 years or even 100 years if the structure is very strong. Okay, somehow if you are able to give a solution or capable of curing these obsolescence factors, so then the lifespan means economical life. Actually, valuers are concerned with only the economic life of the building. Okay, the physical life of the building is determined and decided by the structural engineer. Okay, economical life is decided by the valuer. Economical life of the building is decided by the valuers, whereas the physical life or the structural life of the building is decided by the structural engineers. Now, suppose if as a valuer, if you are able to cure or if you are able to take care of these effects, then no doubt automatically the economical life of the building will be extended for some more years. Why I am stressing means today's subject is that suppose if the building of age 30 years or 35 years, even in the WhatsApp group, I have posted one building with the age of the building is 35 years. Age of that building as per the records is 35 years. Suppose if that building is re-altered, remodified, and renovated, so then what will be the age that is to be considered for the depreciation? Then how its life will be extended. Okay, so that is the today's subject. Before going to that point, I hope that all of you are understood what is this a midlife theory. Midlife theory. So you can apply this midlife theory even for the human beings also. Even for human beings also. Okay, if the lifespan of the human being is considered as a 75 years, see, this will be the first 25 years. And next from the 25 to 50, all this will affect economic obsolescence, technological obsolescence, legal obsolescence, aesthetic and functional obsolescence. Okay, so that is why you should be fit enough between 25 to 50. Okay, even after that, suppose if you are fit, physically fit, mentally fit. So if your mental health and physical health is good, no doubt your lifespan will be extended more than 60 years or 70 years, or it may be up to 100 years. Okay, so this, and even in case of a machinery also, I think there are some plant and machinery valuers also. So you can also apply this midlife theory. Say the lifespan of one machinery is about 15 years. Okay, 15 years. So this may be around 6 years, and this may be around 4 years or 5 years or like that. This may be another 5 years. Okay, otherwise you divide it into 3 parts. So the middle one is the midlife theory. After the 5 years, after the 5 years of the usage of that machine, no doubt that machine will become outdated. That machine will be in good condition. but some more products or some more machineries will be introduced in the market. So in such cases, what happens? Even though by doing all the depreciation and everything, so assume that I have got a one machine. After doing the depreciation for the 5 years, so the value coming around is around 2 lakhs. The value coming around is 2 lakhs. The cost of the machine is 3 lakhs. After doing the depreciation, the value is around 2 lakhs. Okay. Now, what happens is in the market, when we made an inquiry, the same capacity machine, same HP, same horsepower, and whatever it may be, so that is available for 1.5 lakhs. The value of the machine, as after doing the depreciation and everything, after the 5-year user machine, is around how much? 2 lakh rupees. But in the market, when we made an inquiry, the same new machine is available for 1.5 lakhs. 1.5 lakhs. So when such is the case, then what is the value of that machine? That value of the machine is only 1.5 lakhs only, even after doing the depreciation, even though you have arrived at the value 2 lakhs, when the same model, same capacity, same productive machine is available for 1.5 lakhs. 1.5 lakh is the value of that machine. The remaining 50,000, what is to be done? So that is a technological obsolescence. That is a technological obsolescence. So that is how the depreciation is determined by the market, not by the formula. I hope that all of you understood this one, because once if you made any renovation or some additions to the building, no doubt automatically the lifespan will be extended, or even the economical lifespan will be, economical life will be extended. Now, I think I have explained in detail all this age life method, and also the midlife theory, and also the extended life concept. Age life means any physical deterioration which is directly related with the age life, up to, say, we have to use the straight line method of straight line approach method of formula only. So we can directly determine the depreciation up to 25 years. That means in the early age, up to 20 years or 25 years, it is not a problem. But when we come across any building or any machinery with a midlife, then we have to take into account all the obsolescence, whether that obsolescence is there or not. The first thing is we have to accept there should be a depreciation. If there is a depreciation, what type of depreciation? Okay, so we have to identify. After identifying it, what is to be done? So we have to quantify that. Okay. Now, extended life concept. So with the graph only, I have explained. See, if we take care of all this economic obsolescence, and also the technological obsolescence, and also the legal, and any curing is done with respect to these things, no doubt life will be extended. So that we call it as a extended life theory. Now, I will directly come to the point of quantifying the depreciation. How to measure this? Question before the valuer is how to measure accrued depreciation. Even the market will give us the idea of depreciation, but it will not. The market will not give the what will be the external obsolescence, and what will be the functional obsolescence, and what will be the physical deterioration. Okay, the market will give the accrued depreciation, total depreciation it will give, but we should be in the position to bifurcate which is a physical, which is curable, which is not curable, and which is functional obsolescence, and which is external obsolescence. So like that, we should be in the position to classify. So I have got some problems where you can classify the things very easily. I will show that also. Okay, before going for that one, these are the formulas which we are generally using in our daily routine of work of our valuation. Am I right? So most of us, 99% of us are using these formulas. Okay, you just see this formula. One is a direct appraisal method. Direct appraisal method means a lump sum depreciation. So that is also possible. Okay. Say if the value of the building is around 50 lakhs, so directly you can make a depreciation of 5 lakh rupees. So it is a 45 lakhs will be the value of that building. So that we call it as a direct. So it requires a lot of skill, ability, knowledge, and intelligence, and it is not so easy. So one will decide 5 lakhs and another person, another engineer will decide 10 lakhs. Okay. How to decide that 5 lakhs, how to decide that 10 lakhs. So it requires a lot of experience. Okay. Let us not worry about that direct depreciation method. Now, written down value method. Who will use this method? Accountants method. Accountants will use this method. Am I right? Next, straight line method. Straight line method means, see, this method is applicable for only short span. That is a short life assets. Which are the short life assets? So usually machineries. That means they may be having a life period of 5 years, 10 years, or 20 years. Then how to use this for a buildings? See, there is a problem. Up to 20 years, no problem. Because straight line method can be used. That we call it as a age life method of depreciation. But after 20 years or after 25 years, again, you have to remember that midlife theory concept. Midlife theory concept. Whether any such a depreciation other than the physical is there or not. If it is not there, no problem. If it is not there, it is not an issue. Suppose if it is there, then what is to be done? You have to deduct the value for such obsolescence. It may be external or it may be a function. Okay, so that is why straight line method of depreciation should be wisely used by the valuers. Should be wisely used by the valuer. It is not a trial and error procedure, or it is not a magic number. And no. Up to 60 years, you can use the, say 50. If 50 is the age of the building, 50 divided by 60, that is a total life. So that will be the depreciation. No. And this cannot be adapted for all the buildings and all the machineries. Okay, so this is the only nearest easiest formula available for the values. But what about the other formulas? You just see constant percentage of method of depreciation. So this would be used by only the PW engineers. PW engineers, they are more concerned with what? Structural stability. Whether they may be operating any bridges or buildings or roads or whatever it may be, they are always worried about strength and stability of the building. Am I right? They are not the values. They are not the values. They may be CPWD or any engineer. They are always concerned with the stability of the building. Okay. Structural safety of the building. Okay. Longevity of the structure. See, when all such is the case, they will use this formula, constant percentage of method. So they will, so in the constant percentage of method, so it is already assumed that whether the depreciation is to be considered for 1% or 2% or 2.5% like that. So based on that, they will use a formula and they will calculate the depreciation. And this depreciation method can be used to determine the structural safety. That means the physical deterioration. Not and this formula will not be helpful for any valuer to determine either the functional obsolescence or the external obsolescence. So that is why valuer's job is a very interesting job, wonderful job, and he has to use his skill, ability, knowledge, and everything. So that is why the approach is very important. So it is not a simple arithmetical calculation. Just if 30 years is the age of the building, 30 years divided by the total of 30 divided by 60. So that will be the depreciation. Okay. Last time also I have shown the photographs of the different buildings constructed in the same year. Okay. Now also don't worry, I will show some photographs. Now, even a sinking fund method. Of course, many valuers believe that sinking fund method is also used by the valuers. See, sinking fund method is used by the valuers, and here this sinking fund method also, why many valuers use this sinking fund method means in the income approach method of valuation, since it is an interest-based method. Okay. And so let us not worry about, when I come to the matter of this income approach method of valuation, I will talk in detail. So what is the sinking fund? That is the interest that is to be considered, whether it is a 3% or 2% or 4%. Why we have to take a 2% and 3%? And what is the basis for it? See, it is all the matter of the income approach method of valuation. See, again, even by using the sinking fund of method of valuation, we are unable to determine the This is a functional obsolescence as well as the external obsolescence. See, none of these formulas, you just see none of some of the digit method. So this is also not used by the valuers. Declining balance method. So that is also accountants method, and statutory depreciation. So the regarding that also you need not worry for example, under the Companies Act or otherwise under the Income Tax Act, they have given certain depreciation table, standard depreciation. See, for that statutory valuations only, we can make use of that depreciation chart. And the depreciation chart is of no use for the valuers, because we are always interested in determining the market value of the property. Market value means we are always having an interaction with the supply and demand theory. So that means we are having an interaction with the market. Okay. So that is why we should always, that is, it may be a life, age, or it may be depreciation. We should always fight with the market, not with the depreciation formulas. Okay. And key points to measure the depreciation. Once again, I am repeating this one. Depreciation is not necessarily related to the actual age of the property, because I have explained in detail. I will show you a beautiful graph also. Don't forget that graph. Whenever you are doing some valuation, you remember that graph. Okay, so that is more than sufficient. And you remember the midlife theory. Okay, so there are 3 life cycles for a building. That the principle, we call it as a principle of integration and disintegration. Principle of integration and disintegration. There are about 14 or 15 principles are there in the valuation. So when I come up with some more webinars with respect to the principle of how to apply this principle of integration and disintegration, I will come to that point. But for the time being, you just understand, if a building or any machinery is suffering or is with the midlife theory, then we have to think about the functional obsolescence and also the external obsolescence. Suppose if you have kept these points in your mind, automatically, since you are all experienced valuers. See here, I have seen there are more number of seniors are there in our webinar, because I think the youngsters are very less. So that is why they have got the affinity towards the knowledge and they have joined this session. Okay, it is ultimately the market that dictates the amount of depreciation in the property. If you want to calculate the depreciation exactly, that will be decided by the market. You have to prepare a chart of your own. How to prepare that chart? Today's session is regarding that one. How to prepare that depreciation chart, total life chart, and also the age of the building and economical age of the buildings. Okay, I will come up with a more number of problems, so don't worry. I will go slow even with the problems also. And there is not one correct or standard way to quantify the loss value from cost to new. So each and every case is a different in valuation. Each and every case. Okay, one formula cannot be applied to the other formula, and one method cannot be applied to the other method. Okay, so that is what actually we are seeing in almost all types of valuation. It may be banking valuation or any other types of valuation. Okay. Appropriate market value evidence may provide some indication of depreciation. See, appropriate market value evidence. So whether to arrive the market value, whether to arrive the depreciation, whether to arrive the effective age of the building. See, we should collect the data. That means sales data from the market. So then we have to compare those data with the subject property to arrive the value, market value of the property, or to arrive the depreciation, or to arrive the economical age of the property. To decide the economical or the effective age, or to decide the depreciation, or to decide the market value, we have to extract the data from the market. Now, to quantify the depreciation, there are 6 methods are there to decide the depreciation. So these are the methods usually followed by the value. So one is the cost to cure method. So don't worry, I will give example one by one with the practical problems. Okay, you can understand all these 6. I think I may not be able to go with this income capitalization method, because so it is a separate chapter. Okay, for that I may have to exhibit about minimum 30 or 35 slides are there. So that is why other than this capitalization method, the remaining all the 5 methods I will cover in my problems. Okay, today's, because the time is very limited. That is within 2 hours I have to finish the entire subject. So cost to cure method, and another is the economic age and life method, or the breakdown method, or observed condition method, modified age life method, and market extraction using sales comparison techniques. So cost to cure method, I will directly go with the examples, okay, so that you can understand the things very easily. Now you just see a building with granite flooring as sold in the market for 75 lakhs. Okay, a building with granite flooring. So the remaining things you forget. That means you say that see, it is a constant or similar for both the buildings. Similar such building is available for sale with cement concrete flooring. Similar means, so it is equivalent to this building in all other characteristics, height, weight, area, and even the specification and everything same. But the problem is, so this is a cement concrete flooring. Whereas the the property which is sold in the market, we are having a data for about 75 lakhs, and that building is provided with a granite flooring. Find the value of the building which is available for sale. Cost of replacing the CC flooring with the granite flooring is 15 lakhs. So it may be a doors or window, it may be a sanitary, or it may be a plumber, whatever it may be. As a valuer, you just decide what are all the curable functional obsolescence. I'm talking about curable functional obsolescence. If such a thing is there, if it is rectified, no doubt automatically it will attain the value of 75 lakhs. But for the time being, what is the value of the subject property? Here, the cost to cure, sorry, some spelling mistake is there. Don't you just correct it. The cost to cure is 15 lakhs. Why? So we are engineers. We have taken a measurement. The cost of replacing this CC flooring, the granite flooring is 15 lakhs. That means 75 lakhs minus of 15 lakhs. So there will be 60 lakhs will be the value of this CC flooring building as on today. Then what will be the depreciation? Depreciation will be around 15 lakhs. What type of depreciation? So it is purely a functional obsolescence. Functional obsolescence. That means from the point of utility, CC flooring, nobody like to stay in such houses, because all are modernized houses. All are staying in granite flooring house. Otherwise, a vitrified flooring. So this CC flooring is an outdated one. But once if you replace this CC flooring with a granite flooring, no doubt automatically it will fetch 75 lakhs in the market. So this will be the depreciation functional obsolescence, and the value of the building from the sales comparison method is 60 lakhs. Okay, so this we call it as a cost to cure method or direct method of depreciation. Now, economic age life method of depreciation. So this should be wisely used. This should be wisely used, remembering that midlife theory. That means life cycle theory of the buildings. Suppose if you are calculating it for machinery, again for the machineries also. So there are 3 life cycles. Even for the machinery, 3 life cycle, and even for the buildings, say it may be a residential or commercial or industrial buildings. So based on the experience, the valuers or the engineers, they have determined that the buildings or the structures will be having a life cycle of 3 life cycle. Okay. Particularly as a valuer, we should be very careful about midlife theory. Now, if for the timing you just assume that there is no other external obsolescence or functional obsolescence, now economic age life method is also can be used to determine the depreciation. Now you just see a house has a remaining economic life of 45 years. Okay, remaining economic life is 45 years, and effective age is 15 years. Okay, effective age may be equal to the actual age also. Okay, I will give the definition of this effective age as well as the actual age. Okay, now from the point of this problem, Its effective age is 15 years. Now, what will be the total life? Total life is equal to effective life minus the remaining economic life, that we call it as 60 years will be the total economic life. Now we know the total economic life of the building. So as a valuer, we should have a data of all total economic life of different structures in your locality, either the residential, commercial, and also the industrial. What is the total lifespan of the different structures, including the flats? So we should have a data on our table. Otherwise, even this total lifespan of buildings are determined by the even the CPW engineers and also the PWD engineers and many authorities. They have given the lifespan, or even the IS code, they have given the lifespan of the different structures. But they have given the lifespan of the entire, that is the physical life of the structures. But what about the economical life? Economical life. Economic life is to be decided by the valuer. So that is why you should have a data. You should prepare a data of your own. Now, 15 years is the effective age. So that will be divided by the 60. That is a 25%. 25% is the depreciation. So this is a very simple technique, and this is what actually we are using. This is actually we are using. Now, here the age is 15 years. That means well within 20 years or 25 years. Now we can very easily say that the building has not reached its midlife theory or midlife concept. Okay, so when we are valuing a building from 25 years to 50 years, we should be very careful. In case of machinery also, if it is at the middle age, we should be very careful. So this is another method of determining the depreciation. And economic age life method. So one more example, you just see this one. Better if you have a pen and paper on your table, even with a calculator also, because so if you try it, suppose if you get any doubt also, so you can ask now itself. And actual age is 15 years. Actual age is 15 years, because in the last time I have given the only the effective age. Now I am talking about the actual age is 15 years. Effective age is 10 years. Okay, I will come to the point of how to determine this effective age, how to reduce this from 15 years to 10 years, because I have got some problems, some practical problems. Okay, estimated remaining economic life is 40 years. Reproduction of the replacement cost of the new is rupees 2 lakh. Okay. Depreciation with the overall age life or straight line method, effective age is 10 years. So to calculate the depreciation, always we should take into the account the effective age of the building. Effective age of the building. Effective age is 10 years. 10 years plus 40. That is a 40 is the balance economical life. Balance economic life. Here in the data they have given balance economical life. So that would be the total life of the building. So 10 divided by 50, that is equal to 20%. 20% of the replacement cost, that is a 2 lakhs. So 40%, 40,000 will be the depreciation. If it is in terms of percentage, it will be 20%. And if it is in terms of money or the value, it will be the 40,000. Now, here I have used the concept of actual age and the effective age. Okay. Now, direct methods of measuring the accrued depreciation. How to get that data from the market? Okay, I will directly start the problems. I think. Now, you know very well that even with the age life method, we are not going to get the correct depreciation. Okay, even with the without that, suppose if you directly go to the market also, we will get the accrued depreciation. Accrued depreciation means depreciation, that depreciation is a total depreciation, and it is very difficult to classify which is physical and which is functional and which is external obsolescence. Okay, so that is a difficulty. But market extraction method is the best method. Market extraction method of depreciation is the best method. So that is why what we have to do is from the market, we have to get the accrued depreciation. So that is the first thing. That is the first thing. Okay. So it may be around 50 lakhs or it may be around 50,000 or 1 lakh or whatever it may be. We will get the accrued depreciation from the market. After after getting that accrued depreciation, we have to apply some other method to determine the physical deterioration and also the functional obsolescence and also the external obsolescence. Here I have given one example. So you just go on observing this example. Estimate the replacement cost of new improvements. New improvements means, so that is a building that is 3 lakh. Okay. So that is a replacement cost. Okay. Suppose if you have got any doubt, now itself you can ask, subtract the cost to cure all items of curable physical functional depreciation. So as a valuer, what the valuer has done is, so he has inspected the entire property, and see what are all the curable items. Because I have given one example with respect to the flooring. So flooring, so we can replace it. If it is a doors and windows, so we can replace it. If it is a plumbing, we can replace it. If it is a electrical and if it is any sanitary, so we can correct it. Like that, you just decide, subtract the cost to cure all curable items. So whether it may be a physical, functional, or whatever it may be. Now I have arrived some certain value, that is rupees 60,000. Curable, physical, functional, obsolescence. Okay. Now calculate the replacement cost new of incurable item. Incurable item. Now instead of applying this age life theory for the entire 3 lakhs, what I am doing is, see what are all the curable items. I have just separated it, and now I have arrived the replacement cost of the incurable components separately. I hope that all of you are understood. All of you are understood. See, because it is a simple arithmetical calculation. I'm not going to derive any formula like a plus b whole square is equal to a square plus b square plus 2ab or psi square theta plus cos square theta is equal to 1. See, no, I am not going to give any such concept. I know very well that all of your seniors and experienced valuers, so only you are capable of doing certain arithmetical calculation. So that too, so that is why these arithmetical calculation you have to apply wisely. Now, what I have done is, once again, I will repeat, I have deducted the curable items and I have separated incurable components. So that is 2,40,000. 3 lakhs minus of 60,000. So that is 2,40,000. See, in the last column, I have given the explanation also, so that you can read it. Otherwise, you can try by using the calculator or pen. I think suppose if you write something on the paper, so it will be more, you can remember it very easily. So estimate the effective age of the house, assuming the curable depreciation has been corrected. See, that is the 15 years. So here I have directly taken the 15 years. So to arrive this one, we will have a more time to talk regarding the effective age. But for the time being, the effective age is 15 years. Estimate the remaining economic life of the building. So that is also 45 years. Remaining economic life is 45 years and effective age is 15 years. Now the total life of the building is 60 years. Okay. 15 years plus 45 years. 15 years plus 15 years plus 45 years. So now this is 60. Now estimate the percentage of distribution attributable to the incurable components by dividing the effective age by the total age. Now you just see so that is why I call this method as a modified age life method. Suppose if you are doing any valuation, you use this method, that is a modified age life method of depreciation. Modified age life method. Okay. estimate the percentage depreciation, that is 25 years. How I got this 25%? 15 divided by 60. So that is equal to 25%. So that will be the depreciation factor. So instead of otherwise, what actually all the values will do, instead of separating these items, if you do the depreciation for entire 3 lakhs, you just calculate. If you calculate for this entire 3 lakhs, which is 25%, how much it will come? It will come around 75,000. It will come around 75,000. So depreciation of incurable components is estimated by multiplying the depreciation rate of the incurable by, so that is 80,000. 25% of 2,40,000. Okay, so that will be around 80,000. So the total accrued depreciation by the modified age life method is 1,40,000. How I got this depreciation of 1,40,000? 1,40,000. How I got? So this is a 60,000 plus 80,000. 60,000 is a curable, that is a functional depreciation, functional obsolescence, that is 60,000. And from the formula, I have got 80,000. 80,000 plus this is 60,000. The total depreciation will be around 1,40,000. 1,40,000. So this is how, from the modified age life method, you can calculate the depreciation. Now, here I have used certain formulas and I have applied it and I have got the depreciation. How to get this value from the market extraction method? Now, you just see the difference. This is a replacement cost of a new building is 1 lakh rupees. Okay. Sale of a comparable 20-year-old building. Sale of comparable, the 20-year-old building is 80,000. See, that means we have to extract this data from the market. From the market, we have received one data. Say a building with the age of 20 years has been sold in the market for 80,000 rupees. But replacement cost, that is a new building. Suppose if you construct that one, so the rate will be around 1 lakh. That is a replacement cost. That is 1 lakh. But 20-year-old building in the market, it has been sold for 80,000, means 1 lakh. So this is a new, that is a RCN, replacement cost new, 1 lakh minus of 80,000. So 20,000 will be the depreciation. So this depreciation is decided by the market. So that is why I told you in the beginning, even to arrive the market value of the property, even to arrive the depreciation, even to arrive the effective age of the property, we have to collect the data from the market. So that is the market extraction method. Now, how to apply this market extraction method for the complete building? Let us see. Okay. Now, estimated replacement cost new is 30,000. Estimated replacement cost is 30,000. Sales price of the comparable property. Now, I have given. So here it is a sale price of the comparable property is 28,000. Now, in this 28,000, what happens is that it includes the land value as well as the building value. You know very well that when the entire property is sold for certain 28,000 means it includes the value of the land also. Okay, before determining the depreciation from the market extraction method, what is to be done is, so deduct the land value. That means 28,000 minus of 10,000, the value attributable to the improvements. Improvements means that is a building. It is 18,000 only. So 18,000 will be the market value of the yes, the value of that building, market value of that building. Now, accrued depreciation, replacement cost new is 30,000 and minus of this 80,000. So 12,000 will be the accrued depreciation. So in the last example, I have not considered any land value so that you can understand the subject very easily. See, to build a new one, the 20 years old building, 80,000. So direct depreciation is 20,000. But in practice, what happens if any asset is sold in the market means, see, this will be the sale price. That was the 28,000 will be the sale price. Okay. In the 28,000, you just deduct. This method is also called as the market extraction method. In the valuation field, we call it as an abstractive method of valuation. Abstractive method of valuation. For example, when we are valuing a property in a fully stabilized area, like for example, if you take case of a Bangalore in Jayanagar or in Chamrajpete, see there is no vacant site at all. Everything is maximized, all our buildings only. In such cases where actually we will get the land rate, it is very difficult to get the land rate. But we will get the sale data. How we will get the sale data? The entire assets will be sold out, say including the land and the building. In such areas, to attain or to get the land value, what we will do is first we will take into consideration the asset value minus of the value of the building. We will get the land value. We will get that method we call it as a abstractive method. Now this is an alternative or the other way of arriving the depreciation. So that is market extraction method of arriving the depreciation. We have to collect the sale data of a old building. Then we have to calculate or arrive the RCN, that is a replacement cost new, minus of that value we will give the depreciation. But don't forget to deduct the land value because we are doing the depreciation only for the building, not for the land. Now I will go with another example. That is example number 7. Here also. Now analyzing the sales of comparable properties. Okay, a residence that suffers from the same defect as the subject sold recently. So that property has been sold in the market for 1,51,500 rupees. Okay. So if you're having a pen and paper, you just make a note of it. So okay. Otherwise, so there are two for the same problem. There are 2 slides, I think. Okay. So you note down. Note down. A property with the same defect as sold in the market for 1,51,500. Okay. I hope that all of you have noted down this figure. Approximately 6 months before. Because in this case study, I am making an adjustment for the time. See, as a valuer, you have to learn how to make an adjustment for the time, how to make an adjustment for the location, how to make an adjustment for the lot size or the size of the property. At least minimum 3. There are so many factors are there. At least minimum 3 or 4 factors. You should know how to make an adjustment because always you have to do the valuation by the sales comparison method or the market approach method of valuation. Okay, in that market approach method of valuation also, the fundamental thing or the first point that is to be adjusted is you have to make an adjustment for the time factor. Okay, now today at least you learn how to make an adjustment for the time factor because so in my next webinar, so that the next webinar will be on the how to make an adjustment in the sales comparison method. So we have to collect the 2 or 3 data and how to arrive the market value of the property from the market approach method of valuation. So that will be our next webinar in the next CEP. Okay, at least for the time being, you just learn how to make an adjustment for the time time factor. Okay, approximately 6 months before you make a note of it. The time is 6 months before this sale. A property similar in size, shape, physical condition, and location, but without a defect. So here the property is with a defect. And here the property without defect has been sold for 1,50,755. A study of the market indicates that the prices of the properties are increasing at a rate of 12% per year. 12% per year. Okay. So to make an adjustment for the time factor, we need two data. One is sales comparison, that is a value. That is one or two data. That means the properties sold at the different dates. And other than that, we need increasing rate of the real estate. That is, it may be around 12%, 7%, 8%. Now we have got so many websites. So for the particular cities, we will get the increasing rates of the properties even in the website also. Otherwise, as a valuer, if you are doing valuation for or valuation in a particular area, you yourself can decide. So in 1 year, what will be the increase in the value, increase in the rate of the real estate? The sites sold 1 year back, maybe around 1,000 rupees. So this year it may be around 1,200. So next year it may be around 1,400. So that increase in rate, that is a 200 divided by the 1,000. So that will give you the increasing rate of rate per annum. Okay. Now let us not worry about the increasing rate per annum, how to determine that one. Now two data have given. One is sales data they have given, and another is the increase in the real estate value. There is an increase in rate. That is a 12% annum. So these two data are very essential to make an adjustment for the time factor. Now I am making an adjustment for the depreciation. Even in case of a market approach method of valuation also, this is the procedure is the same. The procedure is same. Now 6 months back data, you have to remember the time is 6 months, and the sold property data is 1,50,500, and another approximately 6 months back, same, but without defect is 1,50,000. Now we have got the three data. Other than that, we have got 12% is the increase in rate of the properties. Now how to proceed? Now sale price of the comparable property without defect is 1,50,755. See, I think all of you have noted down because there are two slides. So again, I have to go back. Now you just see, but without a defect, 1,50,755. Okay. Next, time factor is 1.06. Most of the persons, most of the valuers, they have asked, sir, how you got this 1.06? So that is a time factor. That is a time factor. How to make an adjustment for this time factor? If you are having a pen and paper, you just note down. Here I have given 12%. Am I right? 12%. 12% is the increase in rate per annum. Okay. 12% is the increase in rate per annum. So that means 0.12. 0.12 divided by 12 months. Divided by 12 months. .12 divided by 12 months into 6. Into 6. Where I have got the 6? 6 months. Now, here the technique is a very simple. The 12% is the increase in rate per annum. So this is a 12%. What I have done is this 12% I have converted into a decimal. That is 0.12. 0.12. So okay. But what will be the increase in rate per month I have determined? That's all. This 0.12. See, any of you, please unmute and say whether you have understood or not. This 12.12 divided by 12 months. I have got 0.01. Am I right? 0.01 into 6 months. Into 6 months. How much?
0.06, sir.
0.06. So time factor is 1.06. I hope that all of you understood, because see, this is a very, very fundamental thing. What I have done is, so we have got the increase in rate per annum we have got. I have converted that into a per month. What will be the increase in rate? That multiplied by 6 months, because that is a 6 months of data. So 1.06 will be the time factor adjustment. Suppose if it is a 9 months, what is to be done? So you please calculate any of one, please calculate it. Otherwise, you will not learn the sales comparison method of valuation in your lifetime. So because, so you have to make an adjustment for the 4 factors, at least 4 factors, or at least 3, at least 3. Among them, time factor is the number 1. Time factor is the number 1. So today itself you learn. I know very well that even if I send this copy of this PPT to all the participants, I know very well that it is not possible for us to even to open that PPT because all values, I know very well that all are very busy. Even we don't have time to open any of the book or any of our PPT. Okay, so that is why you learn here itself. So that is a 1.06. Yeah, anybody has got a doubt regarding this 1.06? Sir, any one of you, please unmute and you say yes or no. I will. Sir, Chandra Prabhu, sir.
Right. Yes, sir.
Sir, Chandra Prabhu, sir.
Yes, sir. Chandra Prabhu.
Yeah, sir. You want? I think you have forwarded, sir. Have you
yes,
got it?
Sir. Yes, sir.
Okay.
I only asked that day.
Okay.
I called you and asked that time factor how to calculate.
Yes, sir. Yes, sir. I think today I am going slow. All of you are understanding these problems.
Okay, sir. Sir, if it is in 9 months,
sir.
means.
Yes, sir.
Sir, that problem is also there. If it is a 9, you multiply with 9.
1.09, sir.
1.09. 1.09.
Okay.
Sir, can you repeat it for one time?
Sir, here I have got the increase in rate per annum. Okay, 12%. This 12% means, so you converted it to decimal, that is 0.12.
Okay.
Okay, 0.12 divided by 12 months. 12 months. I am converting the increase in rate to the months.
Okay, sir.
You have got 0.01.
Yes.
Sir, even with the calculation of the effective age also, see, very simple arithmetical calculation I am going to do. So please have your calculator, pen, and also one piece of paper. So you can learn a lot today. So now we have got 0.01. Okay. That multiplied with the 6 months. I have given the 6 months.
Yes.
Okay. So that will be the adjustment for the time factor. 1.06. So 1,50,000. So that you got 1,59,000. And keep in your mind very well that to arrive the subject value property, we have to make an adjustment for what? Comparable property. So that will be the one of the multiple choice question in the IBBA examination. Many people are asking, sir, see whether we have to do the adjustment for the subject property or comparable property. See, if you go on doing the adjustment for the comparable property, we will get the value of this property, subject property. Am I right?
Yes. Yes.
Sir, at least see at the time of today's session is an interacting session. So without disturbing, you can unmute it and you can say yes or no, so that I can proceed for the next problem. Okay. Now, less sale price of the comparable with a defect. Less. So this is we have made an adjustment for the time factor. Now we have got this value, but we have got the sale price of the comparable with the defect. So it has sold for 1,51,500. Now, after making an adjustment for the time factor, we have arrived at the property value without any defect. Without any defect, 1,59,800. But with the defect, we are having the data 1,51,500 because it is a new data. Hence, no adjustment is required. Now the difference is 8,300. So that will be the depreciation. That will be the depreciation. That is a
property with defect was 1,50,000, sir. Property with defect was 1,50,000. No, sir.
1,51,500. Property with the defect 1,51,500. It is correct now.
Okay, sir. I think we need to.
1 minute, sir. 1 minute, sir. See, property
With the defect, 1,51,000.
1,51,000.
That is correct.
Sorry,
This is correct, sir.
Correct.
Correct.
Your calculation is correct.
Okay, so now I hope all of you have understood how to make an adjustment for the time factors. Now this will be the depreciation,
Yes,
and this depreciation we got it from the market. This depreciation we got it from the market. That means we have compared the two sales data. One is with the defect and one is without defect, and we have made an adjustment for the time factor. One is with the defect and one is without defect. But what we have done is we have made an adjustment for the time factor. Okay, since we are valuing the property on today, so we have made an adjustment for the time factor. We have arrived these two figures. So the difference of these two gives the depreciation value. Now one more example. Here, approximately 9 months before this sale, a property similar in size, shape, physical condition and location, but without a defect. Has sold for 2,90,000. Okay, here I have got one sales data. So this is without a defect. I have got one data. Now for the time being, you just remember with the defect and without a defect, you have got two data. No, because this is not the sales comparison method of arriving the market value. Our aim is to arrive the depreciation value. Okay. Now for the time being, you just understand we have got two figures. So one is sales data without defect and the sales data with the defect. See, if you go with only two numbers, so your mind will be clarified. So you can understand the problem very easily. Now, similar duplex that suffers from the same defect. Sorry, some defect. Yes, use the word as many. Same defect means yes, some defect instead of writing some defect. So he has written that the same defect. You just make a correction. So this is with some defect. It is 2 lakh. No, this is also. Jivan, you please check this one.
Should be similar defect. Sold now.
1 minute. So the first one is with the defect. Second one is the some defect. Slide number 8. Example number 8. Okay, let us not worry about that one. So I will explain here itself. Sale price of the comparable property. There may be some problem in this one. So you just look into these figures. Sale price of the comparable property without a defect. Okay, so you assume that. So this will be the data available right now. Okay, sale price of the comparable property without defect is 2,90,000. So I have made an adjustment for the time factor, that is 1.03. How I got this to 1.03? Now you just see the age. The increase in rate is 4%. Let us concentrate on this particular points. How I have made an adjustment for the time factor. Okay, the remaining thing you can understand very easily. Here the increase in rate is 4%. If increase in rate is 4%, then what is to be done? 0.04. 0.04 divided by
12.
divided by 12. So that gives the increase in rate per month into what is the time factor? 9 months.
9 months.
9 months. You multiply that 9 months. How much you got?
0.03, 0.029, 0.029.
But that means I have rounded it up to 0.3. Correct?
Yes, sir.
0.029. So I have rounded it up to 0.03. Correct?
Yes.
That is the 1.03 will be the time factor. Okay. Now you multiply this one. So without defects of 2,90,000, 1.03, 2,98,000 less the sale price of the comparable with the defect, 2,92,900. So that minus of this, that gives the depreciation. Now, here the point is very simple. By comparing the two properties, one is with the defect and one without the defect, you have to make an adjustment for the time factor. You have to make an adjustment for the time factor. After making the adjustment for the time factor, so if you take the difference of these two, we will get the depreciation. So that is the point. I hope that all of you have understood how to make an adjustment for the time factor. Okay.
Yes.
Yes.
Yes, right.
Now, I will go with one clear example with the cost approach method of valuation, because whenever we are, now you forget about the land. Now you forget about the land. I am valuing only building. How to do the complete valuation for that building? Now you just see building valued replacement cost 1,800 square feet at the rate of 50%. So that will be the 90,000. That will be the replacement cost of the building. Okay, if you want, you can take down also. Anyhow, I will share this PPT also. But for the time being, you learn the problem here itself. Now, allowance for depreciation. Now, how I have calculated this depreciation? So this method, we call it as a breakdown method or engineering breakdown method of depreciation. Now, I have classified physical depreciation. In the physical depreciation, I have classified curable. So what is curable? So the roof repairs. I have given certain value because you are all engineers. So you have to decide and you have to give the value. Incurable. Say foundation, it is not a foundation setting, foundation settling. If there is any settling of the foundation, so it is incurable. For that I have given 5,000. So we have decided, because you are the right person to decide how much is required for that curable and incurable. And here again, functional obsolescence, curable, add all curable, that is a closet, any sanitary or wash basin or whatever it may be. So that is a 1,600. Incurable, no basement. So that is a 4,000. See, like that, you have to give the value based on your experience and knowledge by using your engineering knowledge. So you have to give certain values, either for the curable and also the incurable. And this is the right method of depreciation. So that we call it as the engineering breakdown method of depreciation. And this is a tedious method and a laborious method also. But I will tell you what is the use of this method. Now, I have calculated the economic obsolescence, poor location, incurable, 5,000. Now, after doing all these things, I have added everything. That is, total depreciation is 18,800. Now, 18,800 is the total depreciation or the accrued depreciation. But what is the value of the building? Value of the building is 90,000. Okay, 90,000. Now, the depreciated value of the building is 71,200. Now, land value comparison method, I've got the 42,000. Now, walkways or driveways, that means any improvements, any extra or the amenities, I have, that is 5,500. Total land value is around 47,500. So estimate the value of this by the breakdown method, that is 47,500 plus 71,200. Now, building is valued for 90,000. Effective age of the house is 10 years. Economical life. See, after arriving this value, what I have done is I have compared the depreciation value by another method, that is straight line or age life method. So that is why before deciding the market extraction or the market derived depreciation, we have to calculate the depreciation, actual depreciation by some other method also. Here you just see building value, that is 90,000, effective age is 10 years, economical age is economical life is 50 years, 10 years divided by 50, that is 20%, 18,000. 18,000 is a depreciation. Now depreciated value of the building is 72,000 rupees. Okay, so this is from the formula I have got. But from the market extraction or the breakdown method also, see, 18,800 will be the depreciation. Here also 18,000 will be the depreciation. This 18,000, I have classified this 18,800 into the different components. See, I have allowed incurable, poor location 5,000, and incurable 3,200, incurable 5,000. See, I have allocated these values, and these values allocation will be done by the valuer. Okay, and this is a laborious method. Only in the exceptional cases or in the court cases you can follow this method of depreciation. That is engineering breakdown method of depreciation. And to say whether we have done it correctly or not, what we have to do? We have to follow this straight line or age life method of depreciation, and we have to calculate. See, in this method also we have arrived the 18,000 value, and no doubt this will be the accrued depreciation, and this accrued depreciation can be classified into functional as well as the economic. See, if it is a functional, and otherwise if it is a curable, up to what an extent. So like that you have to classify. And even with the straight line method of depreciation, the value of the estimated value is around 1,19,500. And even with the engineering breakdown method also, see, we have arrived at the property value as 1,18,700. So that is the depreciated value of the building. To that depreciated value, we have added this
Land value.
land value and also the improvements, that is amenities, 5,500 to arrive this 1,18,000. And even with the age life, that is why before deciding that a depreciation factor, we need to calculate the depreciation by one or two methods. First one is the total accrued depreciation from the market abstraction method, and the other one is from the straight line method or the age life method. So that is why I have explained that age life method of modified age life method, where we can apply separately the curable items and also the incurable items, and only for the incurable items we can apply this age life method. Now I will come to the particular point, that is where actually how to calculate this effective age. So before going for this effective age, you need to understand what is actual age, what is effective age, what is total economic life, and what is physical life. I think all of you are experienced values. Not necessary to explain much things about this actual, what is actual life, effective life, total economic life. But from the point of learning, once again, I will explain what is the difference between the actual age and also the effective age. Actual age and also the chronological age are one and the same. Actual age and also the chronological age are one and the same. See, if you are having the date of construction, either through the tax assessing authority or otherwise from the building plan or from the building license, if you are having the year of construction, then we call it as that age, we call it as a actual age or a chronological age. If the year of construction of the building as per the records is 2010, then 11 years will be the actual age or the chronological age. Okay, sometimes this actual age may be equal to the effective age. See, if you come to if you after verification on, or even after the construction, or even after the age of the building is 11 years, if you find that there is no depreciation in that building, if there is no functional obsolescence, external obsolescence, and only the physical deterioration for the 11 years, then you can say that the actual age may be equal to the effective age. If it is a newly constructed building, or otherwise, if it appears new and the amenities are good and there is no functional obsolescence, sometimes the actual age may be equal to the effective age. But what actually we are doing for all types of building, we are saying that actual age is equal to the effective age, and we are applying the depreciation. See, that is a wrong method. See, where actually we have to consider the actual age. Always we should take into account the effective age for the depreciation. Effective age for the depreciation. Now, then what is the meaning of this physical life? Physical life means from the date of construction till it collapses. So that we call it as a physical life. So physical life of the building is actually determined by a team of structural engineers like the CPWD, PWD, or like that. So they will decide the physical life of the bridge is about 100 years. The physical life of this building is about 70 years or 80 years or like that. And one more questions will be asked in the examination. So the many structures or temples, forts constructed very long back, that is a 200 years or 300 years ago, still they are standing. So that is a purely a physical life. But actually we don't know the exact date of construction or exact date of what is it? Chronological, we don't have that data, but still they are existing, means it is only a physical life. So physical age or the physical life is determined by the structural engineer, not the valuer. But economical age or the economical life is determined by the valuer. Now, what is the meaning of this actual age? The actual age or the chronological age, sometimes referred to as a historical age also. So don't confuse yourself, because all of you have passed the IBB examination. Only thing is the valuers who are going to appear for the examination, they have to confuse. So actual age is also same, chronological age is also same, even the historical age is also same. Okay, to confuse the valuers in the IBB examination, they are giving this question. But for the time being, you just understand, even though you are senior valuers or experienced valuers, you remember that actual age, chronological age, and historical age are one and the same. Now, the physical life, I'm talking about the physical life. It is not uncommon to see the palaces or the forts. This is not a factor. This is forts, palaces, forts. So sorry, our typist had done a mistake. Instead of typing the forts, she has mentioned the facts. Okay, palaces and forts having a 200 years and temples made, stone having a 300, 400 years, or even more physical life. So that we call it as a physical life. Physical life means so till it collapses. And how can we say that it is going to collapse at the age of 40 or 50 or 70 or 80? No, only structural engineer will give the idea. So the physical life will be decided by the structural engineers. So these are all the few things about the physical life and also economical life. Now I will show some photographs, because without showing the photographs, there is no meaning in expanding this effective age. You see this building. You see this building. So this is a old building. And after doing some renovations, alterations, and additions, the building has become like this. So in such cases, how to arrive the age? Now we have, so far we have talked about the depreciation. Now I will talk about only the age. How to consider the age? Now you just see this building. You just see this building. They have not altered anything for the foundation, but without doing something to the foundation, they have altered. They have made some additions. They have made some additions, alterations, and renovations. Now the building is looking like this. See, assume that this building is constructed in the year 2000. Now this building has been renovated in the year 2015. Now, what is the age that is to be considered for the depreciation? See, this is constructed in 2000. This is renovated in 2015. What will be the age? That age we call it as an effective age. That effective age is not equal to the chronological age. Chronological age. But the chronological age of the building is, if this building is constructed in the year 2000, chronological age as on today is 21 years. But
11, sir.
I will,
Sir.
sir.
11 years.
2000, sir. 2000.
2010 now.
Okay, 2010. Then the 11 years will be the chronological age. Okay. If addition and alteration is done at in the 2015 or 2018, what will be the age that is to be considered for the depreciation? That age we call it as a effective age. That age we call it as a effective age. Now you see another building. So this is an old building. Old building. Okay. So this building has been renovated, modified by doing additions and alterations. And now the building is appearing like this. Now the building is appearing like this. I will show some more photographs. Now you just see this one. Before, but after doing some additions, alterations, and renovations. See, when such is the case, because in almost all of our, I think all of you have come across such buildings. You say yes or no, sir?
Yes, sir.
Hmm?
Yes, sir.
Practically, but
Yes,
you
sir.
might have confused that. See, suppose if I take 20 years or 30 years as the depreciation age, automatically the value will come down. Then what is to be done? What is to be done? See, we have to use that formula. See, we don't have other alternatives to use another formula. So in such cases, I think the valuers are of the opinion that what the value we are giving through the traditional method of depreciation is wrong. Am I right? So that is why we need to calculate the effective age. Now, this is the, even in WhatsApp, all the WhatsApp group I have posted this property. Okay, you see, this is a 35-year-old building. 35 years. That means why I have taken this photograph means, so you remember the midlife theory concept. Midlife theory. Midlife. That is the life cycle of a building. No doubt this will be in the midlife. Am I right? Suppose if I want to sell this property, nobody will purchase. See, you see the wonder created by the structural, the engineer. He has created and modified like this. Okay. Are you agreed? Now, suppose if this is to be for the secured lending to the bank, if I take 35 years as a depreciation, then what will be the value? Otherwise, by taking only the foundation, see the foundation has been laid 35 years. The same example is also there. Same practical case study is also there. I will show that case study also. Okay, so don't worry. Now, I have not done any, I have not made any alteration to the building because even some part of it may be old. For example, walls may be walls, even the roof may be say to a certain extent, either say 20% or 30% of the structure may be old, 30% of the structure. The remaining thing I have altered. I have put some columns and extended this roof and also the newly plastered surface and even the doors and windows I have altered. Okay, I have made the different, I have made some additions also, like the roof, and I made some alterations also. Inside also I made some alteration because the kitchen may be outdated, room may be outdated, there's no closet at all. Just by seeing this, you just see the electrical things they have done. So they're all outdated, and open wire system, open conduit system. Am I right? You just see this, I altered even the electrical. That means to say that even the sanitary, water supply and everything I have altered. In such cases, so all the valuers are of the opinion that some correction is to be done for the age. I hope that all of you have understood my point, and if you are agreed, so if NAGARAJAIAH is correct, see what I am expressing is purely my opinion. Purely my opinion. Because what I mean to say is faculty means not to repeat the same thing what is there in the book. In my knowledge, see, faculty means you should come with the research paper. You should come with the research paper in front of the audience, in front of the participants. Now I am put forth this theory in front of you. So you should say whether I am right or wrong. Okay. Sir, you just unmute. Sir, if it is right, I will proceed with the further examples.
It is right, sir, but the bankers are not considering this one. No, if it is a 35 years building means.
Sir, you write chronological age is 35 years. Okay.
Yes.
You write the effective age of the building. You write one more line. You write one more line as per the record. As per the record, or as per the building license, chronological age is 35 years.
Yes.
Okay. Physically, you have inspected the property. You are the right authority to inspect. Okay. Whether there is an obsolescence or not. So you have to decide. Now you write one more line stating that the effective age of the building. The building has been some additions, alterations, renovations has been done on such and such a date. Based on that, you arrive the value that age, we call it as a effective age. You consider that age for the depreciation.
How do I calculate the effective age from the chronological age?
That will be the point. If you
That
say
is
yes
the
for
point.
this, if you say yes for this, I will proceed to the next problem.
Okay, yes, sir.
Yes, sir.
Yes, sir. Yes, sir.
Okay, I will show another building. So you just see the beauty of this building. See, here what I have done is, so this is the old building. Am I right?
Yes.
You just see the walls and all these things. So I have retained it as it is. Am I right? Some part of it, the roof, I have removed it and I have made some alterations. That means some percentage of the buildings are old and some percentage of new. Am I right? Some percentage of the building is new, some percentage of the building is new. Even for the old building also, even the painting and even for the doors, windows and everything, I have renovated. So that is the meaning of additions. You understand additions, and additions means here the additions is there. Addition, alterations. I have made an alteration. Okay, renovations. See, for the even for the ground floor also, I have done the renovations. In all such cases, how to calculate the because at the time of solving the problems, I will not show these figures. Okay, so that is why I am again and again. You just understand addition, the meaning is a different. Alteration, the meaning is a different. Renovation, the meaning is a different. Okay, you just see the another building. So this is another building. See, I have added this portico. I have added this portico. I have removed this portion. So this has been demolished and I have added this one. See, you take a banker, sir. Even for you, you are going to put this photographs in your valuation report. And the manager will also, even after our valuation also, the manager will also inspect the property. Okay.
Yes.
Now, so this is another additions and alterations done to this existing building. And so this is a before and after additions and alterations. You just see the entire aesthetic appearance he has made alter without doing anything for the foundation. Then that means to say that if you are of the opinion that the age is directly related with the foundation, so that is a wrong concept. That is a wrong concept. Okay, now you just see, I will say this ground floor is constructed in one time. Okay, and first floor is constructed in another year. So in our practical problems also, we will come across some buildings. Ground floor is constructed in 2000 and first floor is constructed in 2010. Second floor is constructed in the 2020. So in such cases, so what is the age that is to be considered for the depreciation? Even at the time of constructing the first floor, you will not allow that ground floor as it is. You will do some renovations, you will do some paintings, you will update the thing. So usually in almost all types of building. So now you just you take case of this building itself. You, as per the records, the ground floor has been constructed in the different year. But at the time of constructing the first floor, he has made some alterations and he has added the first floor. We have seen number of such cases in our practical visits also. Ground floor at 1 year, second floor another year, third floor another year. Now, how to get the solution for this one? How the components of your home contribute to the age of your property? No doubt. So the roof will be having a different age, even the windows, so different age. So wear and tear for the plumbing is a different, and wear and tear for the roofing is different, wear and tear for the flooring is a different. So that means each and every items of the building will be having a different age. But what is the, how they have, the engineers have arrived the figure of that 60 years, 70 years as the age of the building. So that means that is a total age by combining all the, by combining the age of all these items. So they have arrived at certain value. So that age we call it as the total life or the physical life of the building. But from the point of valuer, see, we know very well that by doing some additions and alterations to the existing old building, we can create a value for it. Then what actually meant by the effective age? Effective age is based on the property's present condition. That is very, very, very important. And general overall maintenance. Effective age can be lesser than or greater than its effective age. Yes, from the records, you may be of the opinion that the age of the building is 35 years. But if it is not at all maintained, Otherwise, if it is in a dilapidation condition, then you may feel that the age of the building is more than the as per the records. If it is in dilapidation condition, if the foundation is weak, or otherwise if there is a crack in the walls, otherwise if there is a settlement in the foundation, in such cases, say we cannot say that no, the age of the building is only 20 years, 30 years, or 35 years. Okay. See, because on the as per the field condition, the age may be more also. Okay, effective age is defined as the estimate of the age of the structure based on utility and the physical wear and tear. So this age is determined based particularly on the utility and also the physical wear and tear. Okay, when we have made certain alteration this utility and when you have made alteration to physical wear and tear, no doubt we can make an adjustment for this effective age. Determining this effective age of a structure is more of an art than a science. But I will give certain arithmetical check and calculation now how to arrive that value. But it is more an art than the science or the mathematics. Now I will show the different methods how exactly you can arrive the value, but it is an art than a science. For example, an extensively remodeled, that is renovated, 100-year-old home that has been significantly updated could actually have an effective age of 20 years or less. Effective age is a matter of judgment, taking all factors, current and anticipated in the immediate future into consideration. Now, to calculate this effective age, we are using our judgment, taking all factors. What are the factors? Current factors, anticipated, there is a future factors, there is a future benefit. Okay, anticipated in immediate future into consideration. Now, effective age. So there is no worry. So we can calculate very easily. Actual age depending on the building construction date. Okay. What is complex? To calculate the effective age is a complex matter because it is a matter of judgment. Okay. Now, effective age is the art of depreciation. If you are doing the depreciation, particularly to arrive the value of the building, you have to use only the effective age. Even with respect to the international valuation standards also, IVS standards clearly specifies that we have to calculate we have to use only the effective age for our valuation. I think now you have got the answer for the questions, say bankers will ask. Now it is very clearly mentioned that either the Indian value standards, otherwise the international valuation standard, because the India has adopted the international valuation standards as its base. Okay, in the international valuation standard, while arriving the value of the property by the cost approach method, we have to use the effective age for the depreciation. They have not used the word actual age, effective age. Once if they say that the effective age means, so this is the definition. This is the definition. No bankers will say, sir, we have to do the valuation as per the IVS standards. IVS standards clearly specifies that the depreciation means we have to use the age. Age means that is only the effective age. Only the effective age. How to calculate the effective age? Effective age is simply the difference between the economic life and the remaining economic life. It is only the difference between the economic life and the remaining economic life. I think all of you have understood these things. So it is better if I start some problems. Okay. So there are 4 methods are available for this calculating this effective age of the building, or even you can adopt this method even for the machineries also. Now, direct method. Here, if you are of the opinion that there is no functional obsolescence, there is no external obsolescence, there is only a physical wear and tear. Say one building is constructed in the year 2010, and even the rooms are placed very well, even it is with the vitrified flooring or the granite flooring, doors, windows, ventilation, orientation, location, and everything is fine, and even the sanitary water supply, everything is fine. Then in such cases, you need not worry about the effective age. That you just see RCC building is having a life expectancy of 55 years. Am I right? The remaining life is 45 years. So that means effective age is 10 years. Okay, if you are of the opinion that there is no functional obsolescence, there is no external obsolescence, only physical deterioration, you can directly consider the 10 years as the age. That means here the effective age will be equal to the actual age of the building, or the historical age of the building, or the chronological age of the building. Okay, so that is a direct method. But the judgment will be done by the whom? The value. Because I have shown the different cases. Okay. Now, the effective age by the percentage method. Now you have seen a number of photographs. In almost all the photographs, some part of old building will be there, some part of it will be added. Am I right? Now you just see this example. The effective age is calculated by taking the percentage of remodeling. How much percentage of old building is retired and how much percentage of new building is modernized. That means remodeled, otherwise modernized. So in terms of the percentage, now you just take this example, 50% of the total structure of the house is 40 years old. 50% of the total structure of the house is 40 years old. Okay. Next, 20% is 20 years. I have clubbed the different things because there are two or three things are combined in the same building. Yeah, 40% is 40%. Sorry, 50% is 40 years old. 20% is 20 years old, and 30% of the structure is 5 years old. Now I am calculating the effective age by percentage method. By percentage. I have shown the number of buildings. Now you just classify that building. How much is very old? That means the foundation part. Foundation part is old because we have not made any alteration to the foundation. Even the walls, we have not made any alterations. Even the roof, we have not made any alterations. What alterations we have done? We have done the alterations for the walls, doors, windows. Even in our stage inspection report at the time of giving a housing loan, what actually we are doing, if they have completed up to the roof level, we are giving the 50%. Am I right? Based on your experience, you just decide, see how much old. See here, the 50% of the structure is 40 years old. Next, 20% of the structure is 20 years old. And the 30% of the structure is the 5 years old. So this we call it as a percentage method of calculating the effective age. Now I have given a small example, beautiful example. Even though the arithmetical calculation is very simple, I think you can understand very easily. What you have to do? You just multiply 0.5 into 40. 40 years is the age. Am I right? Am I right? Just calculate. Next, 20% is 20 years old. I have just multiplied 0.2 into 20. That is a 4 years. Okay. This arithmetical calculation also you can incorporate in your valuation. Otherwise, you can keep a record of all the structures. Suppose if the age of the building is 40 years, what will be the effective age? So 25 years. So like that, you can have a record also. So whenever I conduct some more webinars in future, I will come up with the different tables, how the valuer can maintain that data. Okay. Now 30% of the structure is 5 years old. 30%, 0.3 into 5. So that is 1.5 years. Now to get the effective age of the entire structure, what is to be done? You add all these things. That is a 24, 1.5, 25.5. See, that will be the effective age of the entire structure. I hope that all of you understood. All of the we are understood. See, here I have not used any blind method or like that. I have used a real concept, but this method we call it as a percentage method. Percentage method of determining the effective age. Is there any doubt in this one? Simple calculation, simple calculation. I hope that all of you are understood.
If the foundations are strong enough, then only it can be applicable.
That is true, sir. That is true. I told you in the beginning, you know, if it is incurable, no. So usually you may believe it or not. See, any person who construct a building, so usually they will waste much of their money for their foundation, for the foundation. Okay, I have not seen even a single person who will say that you do only nominal things for the foundation. Yeah, you do only this much and that much. They will spend a lot on the foundation. Okay, see, as an engineer, you have to decide.
Nagarajaiah sir. Nagarajaiah sir.
Yes, sir.
Here, age of the building is actually 40 years as per record now.
Yes, sir.
But for valuation purpose, we have to take 25.5
Yes,
considering these
that
adjustments.
yes, that is the 25 because the building, I have shown the different photographs. See, you have visited the property, you have enclosing the property, you have property photograph.
Okay, sir.
Because see, you are not only engineer, you are also a valuer. Because once if they made a renovation means automatically it will create a value. Any doubt, sir? Any doubt? Can I proceed for the next example?
Yes, sir.
Next one is the effective age by weightage method. Now, which method is to be adopted? That is a value you have to decide. You have to decide. Here, in this weightage method, the weightage differs from the effective age in that it is used when an improvement has 2 or more segments, each with a different construction date. There are 2 or more segments. Say, ground floor constructed in 1 year, second floor constructed in a different year, third floor constructed in the different year. Okay, so that we call it as a segment. The age is weighted according to the percentage attributed to each construction date. This approach may be used. When to use this method? When the quality of construction is same for both original building and additions. See, you have to remember this concept. I think somebody is asking, what about the foundation? What about the foundation? See, this approach may be used when the quality of construction is the same for both original building and also the additions. Now, what will be the problem? You just see this one. A 10,000 square foot building was constructed in the year 2010. Okay. An addition built in 2017 is of equal quality. So this building has been constructed in the year 2010 and the total area is 10,000 square feet. Okay. See, another addition has been made to this building in the year 2017 and the addition is 2,000 square feet. Okay. If the addition is 2,000, then what will be the total square foot? That is a total built up area. I've calculated the total built up area. 10,000 plus 2,000. Am I right? 12,000. Yeah. Okay. Next, how to determine the original percentage and the improved percentage? Now you just see 10,000 divided by total area. Am I right? I have got 83%. 83.3% is original. Am I right? Sir, you just calculate.
Yes,
Am
sir.
I right?
Yes, sir.
Yes, sir.
Now, the improvement has been done in the year with an addition of 2,000 square feet. 2,000 divided by 12,000. Am I right?
Yes, 16.7.
16.7 is the original. So this is another improvement. Am I right?
Yes,
Now,
yes, sir.
now it is a very simple. You just multiply this percentage with the same year, 2010. So that is a year of construction. Am I right? 0.833 into 2010, 1674.33. Okay, you got it? Now 0.167 into 2017. Now 336.839. Got it? So any confusion regarding this one? I have just multiplied the exact year. Now you add these two because the entire building. So what is the year? 2011.169. So if it is more than 0.5, you can go to the next year, that is at 2012. Otherwise, you say you round it up to 2011. 2011 will be the
Year of
effective
construction.
age of the building. So that should be considered for the calculating the effective age. Actual age of the building is 11 years, but the effective age of the building is how much?
10 years.
So we are doing the valuation as on 2021. So effective age is 2000. So effective age is 10 years.
10 years.
Actual age or the historical age as per the records or as per the building license is 11 years. Any confusion in this one? See, directly I have multiplied the actual year of construction. Actual year of construction.
Is of inferior or superior quality, then still the ratio will remain same.
Sir, in the beginning itself, I told you that this approach can be used when the quality of the construction is the same. Otherwise, you have to improve that quality. See, that means renovation work. Renovation work is to be done for that one. Okay. See, I am talking. So this method. So there are 5 or 6, 5 approaches. So this approach may be used when the quality of the construction. Suppose if the ground floor is constructed with the granite flooring in the 2010. Another first floor is constructed in the 2020 with the granite flooring. With the same quality. With the same quality. So any doubts, sir? Any questions? You are free to ask any questions, sir. Sir Chandra Prabhu, sir.
Sir, one structure is completed in the year 2005.
Okay.
So after that, he stopped the work, and 2010 it is completed. So in that case, how we can find out the effective age and actual age?
So that means a building is completed for partly.
Structure is completed. That's all. Only roof is completed.
No, see, whatever the part that is remaining, actually it is a subjected to the wear and tear. Okay.
2005 and 2010.
Okay. So you have to allow for the physical deterioration will be there.
Yes, definitely.
See, next, that for that we have to make a depreciation. After depreciating, you will get the value. But that can be rectified or curable?
It is curable now.
If it is curable, you prepare the another estimate at the 2010.
No, sir, I am asking effective age and actual age in that case. 2005 ರಲ್ಲಿ ಕಟ್ಟಿ ನಿಲ್ಲಿಸಿರ್ತಾರೆ.
Okay.
2010 ಫಿನಿಶ್ ಮಾಡಿರ್ತಾರೆ.
Okay.
Yeah, I think we have to use this method, weightage method, I think.
This method?
Sir, actually work is started in the year 2005.
Okay.
Due to some financial, this one is stopped the work. So 2010 it is completed. Okay. 2010 it comes for our valuation. In that case.
Okay, so that is also there. That means a partly renovated and partly added.
No, it is not even handed over.
Not handed over. Yes, sir.
Okay.
It is just it is part of the superstructure is built.
Yeah. See,
Yes, that
means you are telling about now. I am talking about the structure renovated and the structure added. You are telling both the things will be there.
Yes.
Even the partly even the additions, alterations, and renovations. So both the things are there. Okay. So there is a combination of these two methods. So that example is also there. I will show that example.
Okay.
It is like in plant and machinery, it was told to us.
Yes, sir. Yes,
the boxed, the items are brought in a box condition.
Yeah.
And it is not opened up for next 2-3 years for whatever reason. We have seen industries working like that.
Yes.
And
yes.
what is the effective age is the start of the commercial start of that equipment starting, not the age written in the manufacturer,
Yes.
original manufacturer. This is right. There is a difference between the equipment start age is the commercial production.
Yes, actual chronological age or the
is not
and also the effective age.
template template age.
Yes.
It is a commercial start.
Yes. 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 Yes.
I think this is a similarity what I find.
Yes, sir. Yes, sir. Yes, sir. Yes, sir. In case of plant and machineries also, because see, in some more next webinars, I will come up with only the purely plant and machinery valuations. Where suppose if any machine is renovated or if it is re-altered, then what will be the effective age? Is the same methodology is applicable for there also, but while making some adjustments, so that some difference will be there with respect to the buildings. Okay.
Sir,
So effective age by the weightage method.
hello, sir. I have one question.
Sir, one thing I will show another example also. After that, we can have that question. Okay. Because there is one more example with the combination of this method. Now, all of you have understood this method. Now, both remodeling and additions. Now, Chandra Prabhu sir, see both remodeling. So, because partly it has been constructed. Now, it has been added. I think he might have stopped at the ground floor or the first floor or even at the roof level. That means it's a partly completed, completed and partly renovated
For
or
addition.
remodeled and different years. Am I right, sir?
Yes, sir. Yes, sir.
See,
Correct.
in such cases, how to make an adjustment? I understand, sir. You use the same methodology. If an improvement as both remodeling and additions of differing ages, the effective age of the modernized portion is calculated first. For example, see ground floor and first floor. I have constructed the ground floor in the year 2010, but I am constructing the first floor in the 2020. But at the time of construction of this first floor, what I have done is I have made some alterations to the ground floor also. Okay. See, if it is only additions, I can use this method. Otherwise, if only percentage, I can use that method. So in such, if there is a combination of both of these, see additions, alteration is also there. It means renovation is also there. And also addition is also there. In such cases, what is to be done? Then weightage method of entire improvement is calculated. See, first we have to make an adjustment for the
Modernization.
modernization. Okay, so then we have to make an adjustment for the additions. First you allow it for the modernization and then for the additions. I will show one more example is there. And here we have used the weightage method and also the percentage method, and we can use area method also for calculating the effective age. See, when the valuer is confronted with the industrial buildings, see, and these two methods can be wisely applied for the residential buildings, particularly, and these two methods. So weightage method and also the percentage method. So these two methods can be used for the residential buildings. But in case of industrial buildings, what happens is, see, the person will be having a total area of about 5 acres or 10 acres. In that 10 acres, so he will construct one building in the year 2000, and another building in the year 2003, and another building in the year, another shed in the year 2012. So like that, you will go on extending the different buildings. See, but in the comparable instances, why I am telling this one means we should arrive at the effective age of the entire industry, because we have to get similar data of such industry. See, one building is constructed in the year 2000, another is 2005. In the different year it means, so how to get the similar data of similar such industries? See whether we have to take the historical age of the other industries as 15 years or 20 years, which age is to be considered. So in such cases, what we have to do is we have to calculate the effective age by the grass floor area method. Grass floor area. And by using this grass floor area, we have to arrive the value. That is, we have to calculate the effective age. Even though the different structures has been constructed in the different years, we have to arrive the effective age. Say the effective age of the entire industrial structures is 20 years. So we have to collect the data or similar data or the sales data of the other industry which is having a effective age of as 20 years only. Okay, not necessarily to construct refer the historical age of the different buildings situated like 10 years, 20 years, 30 years in the same premises. So in such cases, particularly for the industrial buildings and also for the commercial buildings, so this method is applicable. I will show the one examples because as per the CP program, I will complete the this. I think this is the last example I have. I will finish this one. Now you just see one unit has been constructed in the year 1977. One unit has been constructed in the year 1977. The total area of construction is 14,750. The actual age, I am calculating the data valuation is 2021. Even though the data valuation is 2021, I am not going to arrive the value of the property. My aim is to arrive the effective age of that property. Okay, age is 44. Now, what I have done is, so in the last case, I have multiplied the year itself with the total area. But here, what I have done is, I have multiplied this square foot with the actual age of the property. So 14,750. So you can try 14,750 into 44.
649. Yes.
6,49,000. Okay, see, this is called the weightage area method. If it is a commercial complex or if it is an industry, so you can use this method. Now, 1983, 4,200. Actual age is 38. Now, 1983, I have multiplied only the age with the square foot. Now, the total square foot is 13,02,800. Now, the total area is 43,950. Now, you multiply this entire 13,02,800 divided by 43,950. Now we have got 29.64. Say 30 year. See that 30 year will be the effective age for this entire industrial premise. Now, any other industries, sale instances, which is having the age of 30 year, maybe 30 year or 29 year. So we can make an adjustment for 1 year or 9 months or like that. So the nearby similar data or sales data, we have to collect for our market value analysis. Now the effective age for this entire industry is 30 years. Even though the actual age for some structures is 44, even though some structures are younger when compared to this 30. So still the total effective age that can be considered for the either for the depreciation or even to collect the sales data, the effective age is 30 years. So this is also a one method of arithmetical check. So this method can also be used for calculating the effective age. So one more example is there. Here the chronological age of the building is 35 years. I have shown that building, so which is 35 years old. Sales price of the comparable age equal to the subject, that is 1,67,900. Subtract the estimated land value. I have deducted the land value. Now the value attributed to the depreciated building component is 1,34,300. Now the replacement cost of the home and the improvements from the appraisal is 2,200 square feet into 100. See, that is the replacement cost I have calculated. That is a 2,20,440. Add garage. See what are all the improvement. Then you add it. Add site improvements. I've added. So 3,600. Total replacement cost is 2,36,140. Okay. Now calculate the total depreciation by subtracting the value attributed to the improvements. Now total depreciation will be equal to 2,36,140. Here 2,36,140. So that is a replacement cost new. Now from the sales comparison, so we have got the data. So that is minus of 1,34,300. This is 1,34,300. Now the percentage of depreciation of the improvements, that is 1,01,840 divided by the replacement cost, that gives the 43.13. See, that will be the percentage of depreciation. Now total economic life, that is 55 years. So 55 years, that will be the total life of the building. Total life of the building into 43.13. Now I have got 23.72. Now you rounded it off to 24. See, that will be the effective age of that building. Even though the chronological age or the historical age of the building is 35 years, by we have used the data of sales comparison, okay, to arrive the value, and we have calculated the replacement cost. Now with that replacement cost, see, we have calculated the percentage of depreciation. Now that percentage of depreciation has been multiplied with the total economic life. So to get the effective age, here we have arrived the effective age as the 24. That means we have used the market data. Market data means sales comparison method to arrive the effective age of the building. To arrive the effective age of the building. And this is not only the arithmetical check we are doing. See, we have arrived this data by the market extraction method. See, I have used the market extraction data only. Market extraction data. Okay. Okay. From the market extraction data, I have determined the depreciation. That depreciation multiplied with the economic life. So I have arrived the figure, that is 24 years. So this is the effective age of the building. So this age has been determined from the market, not by the arithmetical check or anything like that. So this is another method. One is the area weightage method, and another is a direct method, and another is a percentage method, and another is a market extraction method. So I think I have explained all the methods of calculating the effective age. Now this will be the conclusion. Properly applying valuation methods and techniques not only provides a supportable evidence for a valuer's opinion, but it demonstrates that individual has a knowledge and experience to obtain a reasonable answer to the valuation question. If you want to give a valuation, it's a right opinion in your valuation, you have to substantiate. How to substantiate? With all these data, so you can substantiate either with the depreciation, either with the sale instances, either with the effective age. See, we should have certain data and should have a calculations. How you got it? So this is the method. So this is the technique. And which technique and where? So that is to be decided by the valuer. So that is my conclusion. So rather than the conclusion, I have given my opinion. Okay. Now this is the time for the question and answer session, sir. Now we can come up with your questions. Okay. Otherwise, suppose even in your few next practicing these things. So when you come across any such problems, you can kindly post that questions in the WhatsApp group also. Because in the WhatsApp group, I am always available. You can post that question. So true to my best of my knowledge, so we will be able to provide the answer for your questions. And not only necessary that, so within this time period of only 15 minutes, you have to ask the questions. Even in your, during your practice also, you may come across different questions. Because I am also doing each and every day, even though I got 30 years of experience, still I am doing a research, still I am learning many things. Okay. So I can also learn the different practical problems. So whenever you got any doubt or any practical problems, post your questions in the WhatsApp group so that we can have a discussion and we can have an interaction. And what are all the things I have explained right now? So this is true to my best of my knowledge and also my opinion. And you can also express your opinion. And if you have got any doubt, so you please ask any questions. So still also for 5 or 10 minutes, we can have an interaction.
I have one question, sir.
Yes, sir.
Let's assume that the horizontal expansion, the area of the horizontal expansion is equal to the area of the vertical addition. Okay. Will it have the same? Will they have the same weightage? Okay.
Sir, see, unless we have the data and the actual practice, first, without just by assuming that this will be equal to that, and we will not be able to give the right opinion. See, whenever you come across such a practical problems, you try with these methods. See, otherwise, you yourself will come to know that. So this will be the right method. Otherwise, see, something you are going wrong with these methods. Then we have to go for the alternate methods. See, here I have suggested 4 or 5 methods, but all these 4 or 5 methods are accepted worldwide. Even the American Society of Appraisers, European Society of Appraisers, even in many valuation standard books, so they are accepted. And even IVS has specified the effective age concept. Okay. So if you come across such practical problems, you just post it, sir. So we will try our best to get the solution for these things. Okay. But for the industrial sheds and for commercial properties, so this area method is the right method. Say the industrial area will be around 10 acres or 20 acres. So different buildings. So recently we have seen one building, one area, that industrial area is about 20 acres. And there are about 40 to 45 buildings constructed at a different age. Okay, so I have come across such properties. Sir, I hope that all of you have understood these problems and examples.
Yeah.
Yes, sir.
Sir, in case the question asked by Mr.
Yes, sir.
Tokcham. I think if we are constructing 2 buildings on a horizontal plane in different dates, then I think both buildings should be considered separately and they have to be valued separately. If we are extending the building in the horizontal plane, if the buildings are totally different, I think it is my opinion only. The question asked by the previous
sir, that is a correct. See, which is the best method of valuing any property, sir? Which is the best method? There are 3 approaches. Which is the best method?
Market approach.
Market approach. Am I right?
Yes.
Market. See, when you are going for the market approach method as the best method, and it is a accepted method and worldwide accepted method. See, market approach means we need the market approach data. Am I right?
That is the problem.
The market.
Yes.
So one minute, sir. Market approach data means similar data, similar transaction, equivalent properties. So in such cases, see, we need to arrive the effective age, because how to compare the properties? If the different buildings are constructed in the different years, so which comparison we have to take? I'm not talking about the cost approach method of valuation. See, even for one building, you can do, see, for each and every industrial shed, you have to calculate the functional obsolescence, external obsolescence. Is it possible in case of industrial buildings? Whether that shed is capable of earning or not, or functional, see, physical deterioration, you can do it based on the year of construction. But how to get the comparisons? See, I am talking about the market approach method. Okay.
Yes.
See, if there are about 40 buildings, that means to say that there are 40. You assume that there are 40 assignments of valuations. Okay. For each and every building, you can take either you can use the depreciation methods and you can calculate. So that is the right thing. But I am talking in a broad sense. Broad sense.
Yes, you're right.
Sir, any doubt, sir?
Sir, getting comparables itself is the very big problem, sir.
Very big problem. See, for that you need the basic knowledge of the statistics. So in my next webinar, in future webinars, from the beginning I am telling the next webinar. I don't know how many webinars I am going to conduct. See how to collect the data. It is an art. Okay, for that you need the basic knowledge of some statistics. So I will conduct some webinars for the collection of the data for the valuers. How to collect the data. Okay, see, after collecting the data, how to allocate the data, how to select the data. See, that is also very important. It is an art. See, collection of the data, selection of the data, interpretation of the data, analysis of the data. See, that is the valuation. But we are doing the valuation, but we don't know how to collect the data, how to interpret the data, how to analyze the data. See, we are in the graduation class, but we have not studied high school class or PUC. Okay, in future, no problem. It is we will have a certain classes regarding how to collect the data and which data used to be used for which time and which class of asset. See, it is a art. Okay, now actually when compared to the previous years, now the valuers are attending more webinars and they are getting more ideas and they are having more interaction through the WhatsApp, mail, Telegram group like that. So when compared to the valuations which we are doing 10 years back or 20 years back, now it has been modernized. Okay, now we are also upgraded ourselves. Okay. So with this, can I close the session, sir? With your kind permission, all the participants.
Sir?
Sir, can we close the session?
Yes, sir. Yes, sir. Yes, sir.
So, okay,
Friends, if you are having any doubt, please come forward to ask so that the doubt can help other candidates
yes, sir,
also.
Yes, sir. Yes.
Thank you, sir.
Thank you very much, Mr. Nagaraja. Thank you very much.
Yeah, actually, the session was very much informative. That's why no one is having any doubt.
Thank you very much, sir.
At this stage.
Yeah. Thank you, Bansal sir, for conducting
so friends, this is all
seminar.
for today. Please don't leave the class for 5 more minutes. Please have patience because we are already late and the session was so interesting that nobody can afford to leave before time. Thank you very much, sir, for such a knowledgeable and interesting.
Okay, I will conclude. I will conclude with a few words, sir. So once again, I would like to say my thanks to Sri Bansal sir and also all the administrative committee members of the CEV IAF for conducting the CEP program. And thank you for all the participants who have taken much pain and with patience. So they have listened to all my words. Okay. Thank you for your patience. So thank you one and all, sir. Thank you.
Thank you.
Thank you. Thank you very much, sir, for such a knowledgeable and practical session. Basically, friends, many times you may face a problem of defending your valuation in the court of law or whenever it is challenged and you have to produce a justification to the appellate authority. At that time, actual calculation of depreciation may solve many problems which are arising in the future time due to NPA or at the time of selling the property, and the property may fetch less amount at the time of selling. The calculations and the actual sheets you preserve for future may solve many problems, and the same may be able, you may be able to justify your calculation at the time of any challenge when your valuation is being marked for review or some another problem. In the end, I would like to request Dr. Rajinder sir. Sir, are you there? Dr. Rajinder sir. Yes, sir. Namaskar. Yes. Namaskar, sir. Friends, I would like to introduce Dr. Rajinder sir. He is a backbone of the organization. He is president of Council of Engineers and Valuers. He is a founder member, and due to his, we are on this platform, and we are able to do many things as a. Sir, can we stop the sharing the screen? Yes, thank you. Thank you very much, sir. Thank you, sir. He is a founder member of Council of Engineers and Valuers. He is president of Council of Engineers and Valuers, and he is acting as a now he's on the post of CFO, Chief Financial Officer of the RVO. Welcome. I would like to welcome him, sir. Namaskar, and please say a few words for today's seminar.
Good evening, friends. And I, on behalf of CEV IFRBO, thanks Mr. K.S. NAGARAJAIAH ji. The session was very thoughtful and knowledgeable, and hope all of us have gained and have learned new things which we have never used and never think about using. Though these are new things, so one thing you consider is that CEV is always there to help you to learn new things in the field. These are the things which are not available in journal books of valuation. You will find it, neither you can find it on Google or websites. These are the things which have been very well collected by our today's mentor, faculty, Sri NAGARAJAIAH ji. Many of the things, and you should consider how much effort he might have done to prepare these things and then to make us understand all these things. We are all very thankful to him for such a wonderful session. Thank you all for attending this session. Thank you, Sandeep ji, for arranging such a session for all of us, and hope our association will continue to do so for the benefits of our fraternity. Thank you. Thank you once again, NAGARAJAIAH ji and Sandeep ji, and all the friends attending this seminar. Thank you all.
Thank you, sir. Thank you.
Thank you, Mr.
Thank you, sir.
Thanks
Thank
for
you,
your nice
sir.
work, sir. Friends, with the blessing of God and all your good wishes, today we have signed a MOU with Ministry of MSME PPDC for conducting CEPs for CEV. And we are looking forward that in future, all the CEP certificates will be issued by the Government of India directly from PPDC and TDC Technical Development Center. We are looking forward to it, and we have arranged a special CP on 11th of this month, 11th of July, 11th of August, is specially it will be specially conducted by MSME experienced faculty, and you will get a certificate directly from them with a logo of Government of India like this. I think, is it
Not
visible?
not visible.
No.
No.
Like this, means Government of India logo will be on the top. Let me switch off the.
Yes, sir.
Is it visible?
Yes, yes.
Something,
Yes.
yes.
Yeah. This will be the form of certificate you will get. You will get in future that CEP, you will get 2 certificates. One from CEV, that is for CEP certificate, and second from the participation certificate from directly from the government.
Hard copy, sir.
PPDC.
Is it a hard copy?
Yeah, hard copy. That certificate
Okay,
will be in hard copy only. Yeah, it will reach to your address directly, whichever you at the time of registration you provide the address. It will reach to that address directly. So, friends, thank you very much for cooperating us for and maintaining the discipline in today's session and following the protocol as fixed by the authority. Thank you very much. Thank you, NAGARAJAIAH sir, for such a marvelous and knowledgeable session.
Sir,
Thanks a lot, sir.
Thank you, sir.
Congratulations. Sir, where will the PPT be shared?
So PPT will be shared, I think today evening or maximum tomorrow morning, and it will be available in CEV library, which is available on our official website, cevnews.in. It will be available in the CEV library. In CEV library, there is a folder named CEP files. It will be available in that. Within few hours, we will share it on that website.
Okay, sir. Okay, sir.
Yeah, right, sir.
Thank you.
So, friends, this is all for today. We are concluding today's session. If you are having any doubt or any question, you can still ask. We are always there. if you want to share anything, if you want to ask anything, you can also share in the group.
Thank you.
Okay, sir. Right, sir. This is all for today. Thank you very much. Thanks for joining. Thanks for helping, and keep learning and stay safe.
Thank you, sir.
Good luck.
Thank you, sir.